CCLS, Queen Mary University of London, with over 25 years of experience working with universities, international organizations, and governments on international trade law and public policy. She holds a PhD in international trade law and public policy from Graduate Institute Geneva, an LLM in international and European trade law from the University of Amsterdam, and an MSc in comparative government from London School of Economics, and a BA in politics from University of West of England. Prior to joining Queen Mary, she has served as a senior lecturer and reader in international commercial law at University of Sussex from 2014 to 2023. She is a fellow of the Royal Society of the Arts and an editor of the Public Procurement Law Review. Dr. Davar specializes in global economic governance with a focus on international trade, public procurement, competition law, and sustainable development. She has conducted research, policy analysis, and technical assistance for leading international organizations, which include WTO, World Bank, European Union. She has undertaken Brexit related research and capacity building work for the UK government, the European Parliament, and Northern Ireland's business and procurement community. She has been a visiting professor at Grenoble University Law School, visiting scholar at Erasmus University, Monash University, University of and also a board member of UK in Changing Europe since 2023. A prolific scholar, Dr. Davar has authored a book, over 20 peer review journal articles, several book chapters, and numerous technical reports for the European Parliament and international bodies on issues spanning WTO law, protectionism, public procurement, regional trade agreements. Her interdisciplinary expertise at the intersection of trade law, competition policy, and economic governance makes her an exceptional voice in discussions on fiscal federalism and indirect taxation. KLE Law College, Bengaluru is honored to welcome her as a speaker for Plenary Session 3 at this two-day international conference on GST framework, transforming fiscal federalism in India. Now I would like to request Bharat sir to hand over. Oh, I apologize. Sorry. I welcome you wholeheartedly, ma'am, on behalf of the faculty and members. Now I would like to introduce speaker number 2, Mr. Satish R. Mr. Satish R is a highly accomplished finance and taxation professional based in Bengaluru, holding the dual distinction of being a fellow chartered accountant from the Institute of Chartered Accountants of India and a fellow cost and management accountant from the Institute of Cost Accountants of India. He holds a BCom from Bangalore University and has a robust academic and professional foundation that spans financial reporting, auditing, statutory compliance, and indirect taxation. Since 2016, he has been the founder of Satish R and Associates Chartered Accountants, a firm that provides specialized services in auditing, taxation, financial consultancy, and statutory compliance to a variety of sectors. Mr. Satish R has been actively engaged with key institutional bodies in the field of taxation and commerce. He has served on the GST Grievance Redressal Committee, Karnataka State, bringing practical expertise to the resolution of GST related issues faced by businesses and taxpayers. He is an executive committee member of Lagu Udyog Bharati, an organization dedicated to the promotion of small and micro industries in India, and serves as a general member of the board of Acharya Bangalore Business School. His dual professional qualifications in chartered accountancy and cost management reflect a rare and comprehensive mastery of both corporate finance and indirect tax framework. Sir has also represented before the Select Committee of Parliament on the new Income Tax Code of 2025. With deep hands-on experience in GST compliance, financial analysis, internal audit, and statutory reporting, Mr. Satish R brings a practitioner's perspective to the academic discourse on GST and fiscal federalism. His expertise at the interface of taxation law and business practice makes him uniquely positioned to offer incisive insights on the real-world impact of the GST framework. KLE Law College, Bengaluru is privileged to welcome him as the chair of Plenary Session 3 at this two-day international conference on GST framework, transforming fiscal federalism in India. Now I would like to request Bharat sir to hand over the token of appreciation to sir. Thank you, sir. Sir, now I would like to hand over the mic to the chair, Vishnu Prasad, sir.
Good afternoon. Dr. Kamala and Mr. Satish, my panelists for the day. Well, it's 2:30 now, and the session is for a duration of 1 hour. I would provide a chair note for 10 minutes and then 25 minutes for each of the speaker. However, we could take a few questions quickly at the end of the session as well. So I'm aware that the post-lunch sessions come with familiar constitutional challenge of their own. Not one which is contemplated in, let's say, part 11 of the Constitution, but certainly experienced by all of us, which is post-lunch struggle between intellectual engagement and digestive federalism. Now, I will try to ensure that what follows keeps us firmly on to the discussion of the Constitution. And let me begin my remarks with a lighter observation. A senior bureaucrat once described GST meetings as the only place where economists, politicians, administrators all agree that no one is entirely satisfied, which is precisely how the system works. And that's something that we have to discuss. And we have gathered here to reflect on GST and the way fiscal federalism is evolving. But I would also suggest that let us not pursue this as a technical session, though we have, right? The panelists who are quite experienced enough to take it in a technical sense, but let us not pursue this as a technical discussion about taxation. And I'm also reminded of one of my former colleague, Professor Muller, who is considered to be India's best constitutional law professor. And he always used to say that there are two things certain in India, elsewhere I do not know. So naturally, out of curiosity, we used to ask him, what is that, professor? He used to say, one is death, second is tax. And we are talking about what is certain from the perspective of living constitution. And therefore, we have to see how the power stands negotiated between the center and the state. And we should also see how it gets reconfigured on daily basis. Granville Austin describes that constitution is not just a legal document, it is a vehicle of transformative social revolution, rightly so. I fully agree. And fiscal federalism is one which is not just established once and forever. It is perhaps evolving, just like society evolves. And it is in this backdrop, let me begin by bringing to you that state cannot independently decide to reduce taxes or say sweets before Deepavali concept, which was there with VAT, is no more applicable when we bring in GST. There is a rationalization of the approach, and there is one approach, and there is interdependence. However, the question is how much of interdependence works for us? How much of independence within the context of interdependence must be left open is something that we have to look at from the perspective of the 101st Amendment Act 2016 as well. So there is structural reimagining of the fiscal federalism, surely, right? The way VAT used to work or GST has come into existence and it subsumes its importance today because the entire domain of indirect taxes has undergone a substantial change. And this is nothing short of a paradigm change for India. And in the language of the Union of India versus Minerals Private Limited case, we see that it was pointed out as nothing short of being a study suitable for cooperative federalism. So I have placed a few general remarks, and now there is also what I notice is there is a transformative constitutionalism, right? So whenever you have a new constitutional development, let's say the GST is a new rationalized way of imposition of taxes, And in the morning, we have heard that Professor V. Vijay Kumar was saying that GST is not a new, unique feature of India alone, but you see that there are other countries also which have practiced, and it has its own legacy. It has its own conceptualization in different jurisdictions. Assuming that we have a few of the channels still open for us to have the transboundary perspective, or may I say that, the trans-jurisdictional perspective, we have Dr. Kamala would be addressing probably, because I saw on the PPT, there is a comparative perspective that she would be taking, and more so from the perspective of the institutionalization and also the operationalization of the institutions with regard to GST. That would be interesting. And we also have the chartered accountant with us, Satish sir, who is physically here. And he would be taking us through the taxman perspective, and most importantly, the tax, let's say the sharing of taxes, the sources, how it is collected, how it is apportioned. So a very pragmatic approach that he would be sharing. So it is once again open for the floor thereafter to see whether there is still anything called as the paradox, let's say from the lenses of constitutionalism or from the perspective of the evolving fiscal federalism, and how much of interdependence, how much of, let's say, independence for the states, whether asymmetrical fiscal federalism is also something that we have to sustain, or should we relook? What is the contribution that is coming from, let's say, the major earning states, or not so, financially, let's say, well-off states? So all of these are critical questions to be looked into. And yet another question that is open for us to consider is even the GST Council, the very composition or the configuration. We have to see how there is, a little advantage for the center in terms of having the nomination and decision-making power, especially the voting power for the central agencies as compared to the states. So these are all the crucial pointers that, I would like to say that we have to remember as we get going with the rest of the session. So it is in this backdrop, I really hope that we would be able to traverse some of the vexing challenges to the working of cooperative federalism, or even the onset of competitive federalism, how much of it is sustainable in the backdrop of cooperative federalism. I think that these are all the crucial issues that we have to touch upon. And now I keep the floor open and I invite Dr. Kamala to begin her presentation. Dr. Kamala, over to you.
Thank you very much indeed. Good afternoon, everybody. It's really a pleasure for me to speak today. And it was a very nice introduction I had. So I won't repeat who I am, except that I'm Kamala Dower at the Queen Mary University of London. The argument I want to make today, let me do this. The argument I want today to make today is a constitutional one, although I have to say I'm not a constitutional lawyer, I'm an international trade lawyer, economic lawyer. I'm not talking primarily about revenue or about whether GST was a good policy. What I want to talk about is what the Constitution requires when it removes the tools by which its component units were expected to compete. And it's about the international legal exposure that actually follows from the gap. So my presentation structure is I'll present the argument and the international law dimension. Then I'll look at the constitutional framework and the double bind. Then I'll look at bilateral investment treaties, WTO obligations, and state conduct. Then what I want to do is look at three comparative systems, Canada, Germany, and Brazil, because I think each of these responds to a specific objection that Indian policymakers often raise in this respect. Then I'm going to look at reform proposals and conclusions. I have to say at the outset, I'm sorry I have to run away at past because I'm teaching, but I will hopefully be able to integrate my students into the conference, so I won't leave completely. So the argument here. First of all, what we know is in 1991, the NEP liberalized the economy and created conditions under which the states were expected to compete globally. And this has been reinforced by successive union frameworks. And chief ministers went on investment roadshows, states competed for manufacturing corridors, data centers, renewable energy projects. this was policy. The second point is that in 2017, the GST dismantled the principal fiscal elements that states used to do this. So VAT exemptions, entry tax waivers, differential treatment for preferred investors all went. Now, there are residual tools such as petroleum, alcohol, and stamp duties, but these are sector specific. And you cannot build a broad investment attraction strategy on petroleum and alcohol taxation. They're not substitutes for the instruments that were removed. Thirdly, the Constitution has never provided the alternative governance mechanisms or instruments that every comparable federal system has found it necessary to create. And this is what I'm going to talk about during my presentation. The position I'm trying to submit here is that the situation now is not just incomplete, but it's unsustainable. And I'm going to try and answer this at the end of the presentation. So the domestic debate about GST has focused a lot on revenue distribution and the operation of the GST Council. I'm going to ask a slightly different question, but I think it's very urgent. What are the international legal consequences of this current constitutional position? And I've got three pressure points here that I'm going to look at. First of all, I'm going to look at the bilateral investment obligations. India has over 80 investment treaties. Many predate the 2016 model BIT renegotiation. And we know that the International Law Commission articles on state responsibility talk about organs of government at whatever level they operate as they act for the state. And this means that when a state government undertakes action on land acquisition or environmental regulation or procurement, a topic really close to my heart, a foreign investor might suffer losses, but India, excuse me, will bear the responsibility internationally under the BIT, not the state government. So we're going to talk a bit about that. Secondly, WTO commitments. India is a very active member of the WTO. It's signed up to certain commitments under the GATS, the General Agreement on Trades and Services. And these apply to measures undertaken by the central, regional, and local governments alike. And we also know there's been a dispute, so we have some empirical reasoning here. There was a dispute about India's solar cell measures, and that came under the WTO, and a lot of those solar cells were breached by state regulatory authority. But again, India was expected, the union was expected to respond, and it was union level liability. And again, let's talk about investment diplomacy. There's an awful lot of investment diplomacy going on at a state level, missions to different parts of the world, and the signing of MOUs. But none of this operates within a legal framework. And the consequences of this informality is not state autonomy. It actually exposes the union to obligations and commitments that it didn't authorize or monitor. So I want to be explicit here. The case is not for states against the union. This is a case that the union's own interests in terms of legal certainty, international credibility, and the management of its international obligations, they call for this informality to be further structured. So I want to be really clear about the argument that I'm putting forward here. Okay, so what does the Constitution say? And I won't labor this because I know that you have many, many greater experts in the room than me. So we know that treaty making is exclusively a union power under Entry 14. We know that Parliament alone implements international agreements under Article 253. And we know that the seventh schedule is silent on any role of the state in external economic relations. But look at what the Constitution doesn't say. It doesn't define what a treaty is. So a non-binding MOU, which we've talked about in terms of investment attraction, it's not clearly whether it's a treaty or a domestic act, so it's unaddressed. Also, there's no subnational power diplomacy. It doesn't address the state-level international engagement, which is now standard in comparable federal systems, as we will see. And it wasn't calibrated, the Constitution wasn't recalibrated after 1991 to reflect the policy expectation that states would compete internationally for investment. So this constitutional silence is not a prohibition, but I would say it's actually a gap that needs structural filling. And we know that federalism is a basic structure of the Constitution. So the double bind. Now, before the GST, there were VAT exemptions, there were entry tax waivers, there were different tax treatments for preferred investors, and there were sector-specific investments on state-controlled goods. Okay, we could say this is economically imperfect, but it was constitutionally available competitive instruments. After the GST, we have rate setting, that's the GST Council's prerogative. Exemptions require council consensus. There's no unilateral competitive fiscal offer possible, and the residual tools are sector specific and limited. Okay. The problem here for me is that the GST Council's mandate is domestic fiscal coordination. It doesn't have any international economic mandate. So for me, you can call this a policy tension, or you could call it a constitutional contradiction. I think it's both, but the constitutional dimension needs further attention. Now, let's look at the bilateral investment treaty problem a bit more concretely. So state action here, land acquisition decisions, environmental permits, public procurement, they fall substantially within that list 2 of the seventh set schedule. So they are core state competences. But if a state investor was to suffer a loss as the result of such action, the claim is brought against the Indian Union under the BIT rather than the state government. And because the legal basis for this is the ILC article on state responsibility, Article 4, it provides that organs of government at whatever level act for the state. So the state government's action in India's the state government's action is India's action for international law purposes, and it's not disputed. Now, the renegotiated model bit of 2016 actually partially responded to some of these problems. So we had the exhaustion of local remedies requirement has been added. The fair and equitable treatment standard has been significantly narrowed, and certain regulatory measures have been excluded. But there is still this state attribution gap which hasn't been addressed. So, for example, if Maharashtra changes its land acquisition policies in the ways that might affect a foreign investor, the union faces the arbitration claim, but the state government has caused the problem. There's no formal role in that bit that creates the obligation for India. The union has no structured mechanism to be informed of its content, and there's no notification channel on bid obligations. So if the state does something, there's no coordination or monitoring or information exchange. It's an institutional gap. Now let's look at WTO obligations a bit more. Now, here, as I said before, we've got this dispute which has established the principle that a breach by a state regulatory authority is a breach by India. Now, let's look first at this dispute, India solar cells dispute. Now, this was a domestic content requirement for solar energy procurement. Now, this was challenged by the United States. The panel and the appellate body found that the union had violated both the subsidies agreement, the ASCM, and the TRIMS agreement, which is a trade-related investment measures agreement, and it has national treatment obligations. So by saying you have to buy local, you're actually discriminating against foreign suppliers, and that's a violation under the WTO. And by providing a benefit to local suppliers, you're creating a subsidy, which is also actionable or prohibited under the Subsidies and Countervailing Measures Agreement. So we have this issue. The GATS dimension is even broader. Under 1.3a of the GATS, India has made service sector commitments, and they're applicable to measures taken by central, regional and local governments. India has made the commitments in financial services, telecommunications, professional services, and education. But those sectors, as we know, they're substantially regulated at the state level. So all of them, depending on state policies, can potentially breach and be inconsistent with the union's obligations under the WTO and the GATS. So who is systemically assessing the consistency of these different measures at the state level? The answer currently is no one. Neither union nor the states have a structured mechanism for assessing the legality of some of these measures. And this is really what my presentation is about. Let's talk about investment diplomacy. We know, as I said, we know that a lot of activity is going on at the state level, but without any governing legal framework. There are global investment summits, investor summits. There are state foreign governments MOUs, memorandums of understanding. There are chief minister missions. There are investment promotion agencies. But all of this is without any governing legal framework. So this creates uncertainty for foreign investors being courted. It creates a strategic risk for the union's international position and also institutional instability for the states themselves. So it's not a good situation for either the union or the states or investors. Now let me move to comparable systems, analytical as my analytical framework here. I'm going to look at Canada, which is a Westminster-style federation. So it's a constitutional necessity to accommodate subnational power diplomacy. And this is addressed the objection that foreign affairs belongs to the Union. Then I want to look at Germany, which was a fiscal trade-off. And here the question is, when fiscal harmonization removes subnational fiscal tools, is there a trade-off? What does the constitutional federalism require in compensation? So this addresses the objection that the states consented to GST harmonization. And then I want to look at Brazil, which is a counterexample that was resolved, which was unregulated fiscal competition at the sub-state level. Does that unregulated competition justify eliminating subnational economic governance? Or, I submit, does it argue for something more structured? And the objection it addresses here is that subnational fiscal competition causes chaos. So I want to look at these three different models to address these objections. Okay, the first one is Canada. Now, Canada has got this Guérin-Lajoie doctrine since 1965. And this is the proposition, it was articulated in 65. The proposition is a federation cannot give its central government an international monopoly over a subject matter for which that government has no domestic competence. Provincial competence in domestic matters extends internationally. So it's not a concession here by the federation, it's a constitutional logic. So I just want to be clear here that this the status of this doctrine is a constitutional doctrine in Quebec. It's not a rule endorsed by the Supreme Court of Canada. However, its force is functional, but that function has proven to be practically indispensable. And we can see that in the CETA agreement, the Canada-European Union Trade Agreement of 2016. Procurement, labour, regulatory cooperation, they're all provincial, sub-state level competences. And the federal government could not sign these agreements without structured provincial participation in the negotiations. So the result was you had the Joint Ministerial Committee, plus you had provincial side letters, plus the implementation role. And this is constitutionally required, it's not politically volunteered. Now, if we look at that logic, we transpose that logic to India, we see that sub-state competence covers land acquisition, procurement, labour, environment. So should the union exercise an international monopoly over subject matter, which is actually a sub-state competence? in India. Structured state participation is not a political preference in Canada. It follows from the federal division of powers itself. So if you transpose that logic into India, you would say, well, we need participation. It's a constitutional necessity. It's not a political decision. Okay, Germany, fiscal trade-off. In Germany, they have a lander. They have lots of, it's a federal system anyway, and each of the sub-state units are called lander, and they accepted fiscal harmonization under the EU Stability Pact under European Union state aid rules. But in exchange, they received structured constitutional participation in EU decision-making, and that has been articulated in Article 23 of the Basic Law. So federal government must take Bundesrat opinions into account in EU negotiations affecting the Länder competences. There is a standard consultative mechanism. 23.6, in areas of exclusive Länder competence, a representative may formally lead the federal negotiating positions. It's very rarely invoked, but it is available. And the principle behind all of this is harmonization without compensating governance instruments is constitutionally incomplete. And this has been encoded in basic law. So the question for Indian states here is, the Indian states accepted indirect tax harmonization through GST, but what did they get in return? A compensation mechanism which some are said to be structurally inadequate, a GST council that has no international mandate, and there's no structured role in economic negotiations that directly affect the tax base states govern. Okay, my last example here is Brazil. So there was a fiscal war, guerra fiscal. Brazilian states competed via state VAT, value-added tax exemptions, and this led to revenue erosion, investment distortion, constitutional chaos, and ultimately federal intervention. And this validates what the GST harmonization logic has put forward in India. However, in Brazil, they didn't solve this sub-state war by eliminating sub-state, subnational economic governance. They regulated it with alternative structures such as Sao Paulo's Invest SP, the CAMEX, SECEX framework for state participation in trade policy, and this has evolved after successive administrations. So fiscal competition in Brazil is regulated. The governance capacity at the state level has not been eliminated. So we have the resolution. Brazil's fiscal war argues against unregulated subnational capacity, but that does not mean it argues against subnational capacity, governance capacity altogether. Regulate, don't eliminate. So now my reform proposals based on that overview. So you could have level one proposal, reform proposal, which would be the statutory framework. So let's look at Brazil's regulated practice. You could amend the Foreign Trade Act and add a subnational chapter, mandatory union approval for states' MOUs with foreign governments, standard templates ensuring non-binding character, annual parliamentary reporting, and could secondary legislation under the FTDR Act, as amended in 2010, actually achieve level one reforms without even requiring primary legislation? Level two would be the German model, subnational economic diplomacy, modeled on the GST Council, a joint union state body setting guidelines for international engagement, reviewing MOUs, providing states a structured voice in trade negotiations and BIT negotiations where they affect their competences. And there's a logic there. It's already in the GST Council's Article 279A architecture. Then the third level will be constitutional clarification, which is the Canadian model. Do union international agreements touching the seventh schedule state competences actually require structured state consultation? And that would be either a constitutional amendment or Article 143 Supreme Court advisory opinion. So what I'm submitting here is level ones and level twos are available without constitutional amendment and can be progressed immediately. Level three provides a long-term constitutional foundation. So I'll just finish here with my conclusion. In Canada, we can see that where federal agreements touch subnational competences, structured subnational participation is constitutionally required. It's not an option, it's required. In Germany, we see that harmonization without compensation is incomplete constitutionally. And in Brazil, the fiscal war that they had validates harmonization, but it doesn't justify eliminating subnational governance capacity. Actually, it demonstrates that structured international engagement is constitutionally necessary too. So what I want to conclude with is India has every condition that these systems faced. It has the constitutional space, it has the institutional precedent, and it has a statutory vehicle. My question is it now time to connect all of these? So I'm going to stop there, and I hope that that provided some food for thought. I'm afraid I am going to have to leave very shortly, but I hope that you can carry on this discussion, and I hope that I can be informed about what you were talking about afterwards. And please feel absolutely free to get in touch with me if you want to clarify anything, if you want a copy of my presentation, or if you'd like to see my lecture paper.
We would certainly be, troubling you, Dr. Kamala. This is Dr. Vishnu Prasad here. Thank you so much. I think you have given us a very valuable set of perspectives. Especially, I like the way you have thought out of the box, not just from one constitution, but you have also brought the international perspectives, especially the WTO, then bilateral, agreements perspective, which is, I think, very contemporary. And in comparative studies, we must be having some weightage being given to these areas. I feel that's my personal opinion. Thank you for sharing that. And if there are any, maybe if time permits, can you just take a couple of questions if there are any questions to be, is it okay?
Yes, I have 5 minutes, I think.
Yes, we would judiciously use that 5 minutes. If there are any clarifications or if there are any observations that you would like to share, then the floor is open. I had one question in the meantime while they, gather their thoughts together. I just wanted to know from you. This is a clarification. You were speaking about the German practice wherein, there was a harmonization. So, do you see that there is a, bureaucratic standard that could also work for India? Is something that I was curious to know from you.
Well, I think the interesting thing in Germany is that in some ways the hand was forced by European Union requirements. So the European Union competition law just do not accept that that they won't follow EU state aid rules, which is giving preferences and benefits to local companies, such as local content requirements and solar cells. So in some ways, Germany's hand was forced, but the fact is we have these principles of subsidiarity and it's supposed to be bottom up in the European Union. So they were forced to compensate. They took away something from the German sub-state competence, and they were forced to compensate. The same in Belgium. Actually, interestingly, some of Belgium, the sub-state, the Walloon part of Belgium, they can actually veto an international agreement the European Union signs. So the European Union therefore has to be really sensitive to what the states and the sub-states want. And I think this is what I'm missing here, the sensitivity to listening to what the different states want and having a formal structured mechanism by which the union has to involve them into any discussion. And this is what Canada has done. This is what Germany has done. And it's a quid pro quo. You take something from us, then you have to give us something back. And we want a voice. You're not going to make decisions and negotiations and commitments that we haven't agreed to. We are part of this federation. It's constitutionally decided.
Agreed.
I think it's an insensitivity that upsets, the democratic standard that we have in India.
Agreed.
But please feel free to, my students are outside, but please feel free to, I'm happy to do a presentation again in a different setting online where I have more time. I'm sorry that I have to run.
We understand.
We are looking forward for that, Kamala, and thank you very much for that wonderful presentation. It was so interesting to see bringing experience from different geographies and letting us understand how we could have lessons from those environments. Thank you very much, and thank you profusely for offering to and intending to have a few more sessions of this type. We will get into
Absolutely. I thank you.
pleasure.
We
I
do-
know your students are waiting in the next room.
Yes.
Thank you very much.
Thank you,
Bye-bye.
Doctor. Thank you.
Bye-bye.
Thank you. Good day. So now I invite Mr. Satish to take over. Thank you.
Good afternoon. Thank you for the management to giving me an opportunity to present on fiscal federalism on GST. Before talking about the fiscal federalism, so why GST was needed, I always ask the basic questions. Why GST was needed? If you're able to answer, if you're able to find out the answer to this, then fiscal federalism starts. That's the problem. First, let us find out the problem there. Then we'll understand what's exactly led to this fiscal federalism. Like India 1947, we got an independence. So we decided to adopt democracy, where again there was a problem who to rule, which to adopt, and other things. So finally we concluded with adopting the democracy. It took 3 years for us to adopt the constitution, where the states had their own powers and three-tier structure. Now the question arises, who is going to feed the states? It says most of the activities or areas under the constitution falls, saying that the state has to look after them. It's like a mother which has to feed by its own children. Central has a more autonomy, that is, have the more control of the country, which look after the defense and foreign relationships, everything. 1944, we have an Excise Act, Service Tax 1994, and we opened up an economy in 1991, LPG, right? Then the slowly states started, it was a sales tax, CST was there, and then it started implementing a VAT. GST is nothing but a VAT, basically. It's a value additions. That's it. So when those laws were doing justice and collection was good, why some other new act used to be replacing the old acts? Why GST has to come into picture? Is it not a question to be thought before understanding what is this between central and state and what is leading to the fiscal deficit or a fiscal federalism between the central and the states? Isn't it? So my question is 1944 till today, 2003 VAT in Karnataka. It was doing good. But what made us to think, let us introduce a GST? So it is not in 2017 it was introduced, but so it had a plan. So we have to be in a global, when 1947, we were somewhere and we reached, now we are in the slowly developing phase. So in order to attract the investors, so the biggest threat is population and biggest opportunity is also the population. 140 accounted, census is started, census has already started, right? So Western, they look after the technology. When they want a market, India is a marketplace. But foreign investors looks at very simple thing. So goods and services tax, harmonization. States will tell, I want the revenue, I can, constitution is supreme. We are not completely having an inferior or superior complex. So we have our own powers. So we will tax. So this led to the cascading. So ma'am was mentioning that. So it was between the state. Like example, can the Karnataka government enter into a US government a treaty or a MOU or an investment or whatsoever it is and directly have it in Bangalore or anywhere in the place of Karnataka? So what is stopping them? So if you're able to understand this crux, then fiscal federalism is completed. Okay, so when we want to mark our place in the global economy, so there was a rationalization, that is, a changes was required in terms of taxation, the government revenue, where the central had their own authority and the state had their own authority. So there was a problem created by the constitution. It's not a problem, it is the constitution gave the powers to central and the states in their own articles. That is, Article 245 gave the powers. So referring Schedule 7, lawmaking powers for any laws, list 1, list 2, and a concurrent list. So list 1, like income tax, service tax, customs, are all with the central. So states have their own powers to levy the tax, so that majority of the cases where the state has to look after, they has to tax. Now the question arises, if we are going to bring the GST, where is the constitution power? So Article 265 says, no tax shall be levied except by the authority of the law. Who is supreme in India? Is it Prime Minister? Is it the President? It's a constitution. Can the constitution be amended? Today at 4 o'clock, we have one bill. Correct? So that means even the constitution can be amended. So for that, that's a part is called as a democracy. We have adopted this, whether we like it or not. It is not a completely foolproof. It has its own demerits and merits. So we have to follow with that. So now we thought, if we are going to introduce a one nation, one tax, one market for everything, there is a conflict. There is something which was prohibiting us, or something which is stopping us from bringing this tax, because states were not ready to give up. When states were not ready, central will also say, I used to get revenue from other parts like service tax, another thing. Why should I share to you? So this is again, they want to share the taxes. Again, they want to share the taxes. It's a completely. And we know that list 1, 2, 3, in that concurrent list where both will have the powers to levy the taxes. Like an example, education, like, taxes, it's like both have the powers to levy enact the laws. But they didn't enact it through the concurrent list. They provided separate article for bringing the GST. What can be the reason? They would have easily given in the residual list, that is concurrent list, for bringing this GST. They didn't do that. What can be the reason for this? This one point makes it clear what is fiscal federalism, why they are fighting it. Okay, so 246A article overrides 246 and 254. Okay, for the GST article 246A gives a power and not article 246. So 246 schedule 8 list 3 could have been created the GST law, but the states did not agree because the center will have the supremacy. When there is a conflict in concurrent list, central will have the supremacy than the state law. That is the reason state did not agree. No, if we cannot be under the pity of you, let's have a separate list. That is 246. Yeah. So 254 says any difference between state and central tax, that is central act, will prevail. 269A IGST. Again, there was a problem. See, imagine a country like India with a diversity, complete diversity, with the geographical conditions, with the different states having different capabilities. It was difficult for a country to have a one nation, one tax, where obviously they have to go for a federal system. So states were not ready, central. So they created this structure, but the problem arose, what was the taxes between state to state, interstate? That was. So earlier CST Act was there. So central government used to levy the taxes, but that was given power to the state governments. Now they decided, let us have this. IGST is being controlled by central government. So now we are clear where is the issue. Taxes, who is collecting what? Whenever you get a bill, you find it two taxes: GST, CGST, and SGST. And what if it is an interstate IGST? So we don't find it two types of taxes. So central is also getting their revenue. States are also getting the revenue. Now again, the challenge arises. Who is going to control this if there is any issues? Karnataka state government says, I want to give a subsidy. So I want the rates of taxes to be reduced on certain particular products or services. Central say, no. See, first understand how this tax laws work. As Sir said in the introduction, there are two things certain: death and tax. So tax we have to pay. We don't know, we are paying, we are enjoying. That is indirect taxes. We are smiling. We are giving it. We don't know. We are not aware. That is indirect taxes. We know which is painful. That is income tax. But you pay out of your pocket. No, that 10 is nothing but an income tax. So now the question arises, how this has to controlled. Administration mechanism cannot be a vacant. vacuum. There should be someone. So state said, let us have no. Central said no. So there a combination of the things that is called as a GST council. So where is the power given for the GST council? 279, Article 279 gives the power for the GST council, which says what is supply. We don't call it as earlier for excise. Manufacturing was the event for taxability under excise law. For VAT, it's a trade, sale, what you used to describe. For any of the taxation, that's the basis of charges important. Okay, so intra-state supply, concurrent, parliament and state. That is what we are seeing, CGST and SGST. So when it comes to interstate, IGST, that is parliament, IGST. Okay. So what does this GST council, whenever you get this opportunity, when the prices increase, rationalization of rates, now they had 4-5 rates, now they removed it and brought into the only 3-4 rates. So who's responsible for that? See my question, you might have seen the story. Let us forget we are in the classroom or technical session. Let's understand in a plain layman language. So CM Siddaramaiah says, first disclaimer, no political parties I'm acclaimed, anything, but it's only for the discussion purpose. Okay, yeah. So he says, he has written to the Prime Minister saying that we got lost, revenue is being lost for the Karnataka state, and Kerala is also, few states are supporting. They say it is non-BJP, BJP state, NDA-led governments, all those things. My question is, when they are claiming that there is a loss of revenue, what led them to the loss of revenue? Additionally clarified, GST council is the one which takes that's a combination of state as well as a central. So 75% majority is required to pass any of the rates rationalization, other things. So for your understanding, I'll just mention what is the role of a GST so that we can move ahead. GST legislation, taxes to be subsumed. What are the taxes to be subsumed under GST? Those things, because it was a cascading effect, tax after tax. Input tax credit was not available. That was burdening the end consumer. So my mentor has taught me, one, first convince. If you're not convinced, then confuse. Okay, so I'll just try to explain first. Okay, taxes to be subsumed. So GST council decides what are the taxes to be brought in and to be implemented in the GST. Rates exemption threshold limit, like we call the 7 sister states. The exemption limit is 10 lakh, which is being treated separately than the normal states. Okay, that one. So dispute resolution. We have a disputes between the states, like he's claiming central is not giving, all those things. Date on which the petroleum products to be brought in. Petroleum is out of GST. So I still wonder how this petrol prices suddenly decreased during the COVID, but still remained at 100. When the price barrel increased after this during the war, still remains the same. And suddenly, then who is controlling this? Yes or no? That's a question we need to think on. So that is, petroleum products are out of GST as of now. That means state will have the power to levy the taxes as well as central. So while filling the petrol, I feel I'm not filling the petrol, I'm filling the treasury of the governments, both state as well as central. Okay, so special rates for specified rates, that is flood in case of natural calamity. Recently we had seen with the Kerala government. So special provisions for special category states, northeastern states, that is what we call as the 7 sisters. Harmonized market for GST, one nation, one market. These are all the things which will be done. And additions is that one is who is the chairman of who can be lead the GST council? That is finance minister at present, Madam Nirmala Sitharaman. So 2 and any state minister for the finance, they will be leading to 29 states plus 2 union territories. Total it comes to 33. So center will have a 1/3 of weight in the voting power and the state will have a 2/3. Why I gave this picture is, this is where the real problem starts with the fiscal federalism. Every state representatives, anyone, it need not be a finance minister, any person who can be representing the states. From Karnataka, Krishna Bairagoda is representing the state. Is doing good. Okay. So when the state government are already involved in the GST council, what is the problem? And the states has to agree for every rate cut, every changes, rationalization, everything. So when we look at the federalism, the structure of federalism, state will have a self-rule as well as a shared rule. Self-rule, it has to take care of everything. The more responsibilities on the states to look after it. Law and order, education, healthcare, where the government gets, state government also has to get the revenue. So you made a point like GST, you're collecting the taxes. This is an issue now. Got it. But if we are leaving it like a different country, like earlier days, we have seen, right? One area, one king used to rule, another area, another king used to be there. So it was completely scattered. Now it is not so. We have in the democratic process. So what happens is shared rule. If the, so this, the central has to ensure what is the control mechanism in the federalism. So coming to this, there is again a challenging task when the government gets the revenue, total pool, it comes to a consolidated fund, how to share for a fiscal to the states. Karnataka, Tamil Nadu says, I'm the manufacturing hub. Maharashtra says, I'm number one in collection. Karnataka says, we are also number two. And we are moving into the number one. And when I consider the states, Karnataka is doing far good. And state government says, we are not getting the revenue. Earlier, before introduction of the GST, we used to have our own share. We used to do anything and everything which we required. So comparatively, we are doing good, but we are not getting the revenue. I'll put across like this. State like Karnataka, Bangalore accounts for more than 60% of the revenue. If that is the case, then Bangalore alone, the entire collection belongs to Bangalore. Why it has to be shared to the other parts of the other districts of the state? Does it make a sense? So central government thinks you're not the only child. We have other states to look after. Who decides this? Finance Commission. So Finance Commission says, okay, we will look after what are the priority areas. We will look into this. At present, 16th Finance Commission has recommended 41% of the shares to be given to the states. So got the whole idea of federalism, fiscal federalism. So this is what. So now any states are asking, give me this. See, states cannot, that is a self-rule is one, shared rule is one. Self-rule, yes, for the development activities, end of the day it is India. Matters a lot. Economic interest. And the government, by looking at the budget in the previous union budget, we expected a growth rate of 7%, where the world is not even expecting 3 to 4%. We are just expecting at 7%. Obviously, due to the war and other cases, it may come down, but we are far better than the other countries. Correct? So central has their own interest, where it is expecting the state also to contribute in that direction. So it cannot be like subsidies. Fiscal deficit has to come down. How? The overall Indian picture we are giving, the fiscal deficit is being controlled. Inflation is being controlled. But India consists of the states again. When the states are not doing correctly, that is again a problem. Uttar Pradesh, like each has their own interest, priority sectors, different backgrounds. Maharashtra says, I'm looking after manufacturing. Gujarat says, I'll look after the port infrastructure. Bihar says, I'll look after the tourism. The revenue sharing will be different. Himachal Pradesh says, my seasonal, only tourism is my income. J&K is completely full of problems, so it is completely of revenue comes from the tourism. So this is where the revenue, how to allocate the revenue, that is a challenging task. This is what the fiscal federalism is all about. Okay, so one is collection of the revenue. Now distribution among the states, 41% is what recommended. Again, between the states, out of this 41%, to whom, what is the percentage is going to be shared? That's again a challenging task. So that will be decided by the Finance Commission. So my question is, can the Finance Commission recommendation override, can the government, central government override the recommendations of Finance Commission of the central? Same applies to state. Finance Commission of the state recommends that yes, this is this. Can it override legislative? Yes, but it has to give reasons in the floor, parliament sessions. Why? Even though we have recommended so and so, you have been deviated. So what is the reason for that? So there comes the audit, C&AG. So it gives compliance audit, performance audit, and financial audit. It says what exactly it is. Now, like state like a Karnataka, they're complaining that they don't have money. We have lost subsidies, political. So the proliferation of the popular schemes at the state level for the short-term electoral gains, that's the biggest problem. Okay, it's not with the state. Again, one state does, the other party is bound to follow the same structure. This also leads to a deficit. That is, they want the money. Where do they get the money? Revenue. It's simple. It's even a state or a country. It is as simple as a human being, individual. Where do I get the money and where do I spend the money? It's an income and an expenditure. As simple as that. So this income, where do I spend? Is it on the balance sheet items? Chartered accountant, typical chartered accountant. So balance sheet items. That means whether it is on a fixed assets or on the revenue items, whether I'm spending it on a salary, subsidies to gain my popularity so that I can enjoy my the freedom, even though I call it as a democracy, I can enjoy like anything. So this is the issue. Then it's simple. When the development activities are stuck or stopped or prolonged, somewhere I should blame, right? Democracy is that. I can say, hey, central is not giving. Someone has to blame. It's not politically motivated agendas are completely different, but real burning issues are different. So we are talking about the real issues, whether really there was an issue in the COVID-19 where cess was imposed. See, well, I'll just explain this, then we'll move on. Introduction of GST in 2017. So where we were also not prepared. We don't know how to file the returns also. We thought it is filed. 2 minutes, sir. Okay, fine. So revenue neutral rate, RRR, we call it as. Before introduction of something, new taxes, there was some revenue we used to get it. After introduction, do I get the same amount of taxes or not? That is called as a revenue neutral rate. Unfortunately, it was not so. Government is not achieving the revenue neutral rate. So before the introduction of all this GST, all these taxes, say for example, 100 rupees was the income which used to tax as a taxes, government used to get. After introduction, it is not 100, it may be 80 or something. Revenue neutral rate. So government felt introduction. So cess. When the states asked, yes, compensation, we will provide the compensation for whatever the losses you are bearing for subsuming all those things. So over a period of time, so India has at present the best system harmonizing the system like GST Council, where it cannot act, central cannot act without leaving the states and states cannot act without having the central. So it is taking, like ma'am used to mention that. So they are taking both central and state together in getting this harmonized structure. So where do they get the money? Apart from if you're not satisfied or getting, so there will be a inbuilt competition between the states to attract the investors. That's a real thing. So apart from this, I'll take only 1 minute. Central government agencies where the state can borrow the funds like LIC, NABARD for water supplies and other things where they can get the implements. And also central governments are already started Jal Jeevan missions, Swachh Bharat, like this, many things. And states can also borrow the entire amount of subscription to small savings in their states for National Small Savings Fund. Electricity for farmers given free, so they need not pay as a subsidies. And collect advances or delay payment to the contractor. I think the burning issue is what you have seen in the Karnataka government. Contractors were not paying. They used to have a 40% commission, 50, 60, whatsoever it is. So this is prolonging the payment so that they get the working capital and they can focus on anything. As simple as that. So within the given time frame, I think I just gave some thoughts on the fiscal federalism. So it is open for the floor for any questions.
and he did inquire, what is the majority composition of the audience? I said students. And immediately, sir decided to tailor make it for the consumption of the students. And if you saw, there was a lucid presentation starting from basic questions, why GST was needed, from that to who decides how it is distributed, and to the role of Control Auditor General. I think that was all for the consumption of not only students, but better students, teachers. Now, I come to few concluding remarks. When I was trying to understand this whole, theme-based constitutional standing, I discovered, to my shock, that Article 270 clearly says that the cesses and surcharges which are levied by the union shall only go to the union, and it is away from the state's reach. So, in other words, there is a shrinking divisible pool on the one hand. Plus, you saw the extent to which the states can have some sort of a takeaway from GSTs is about 41%. Plus, CAG's reports, we often get to know from social media, and you can Google and find out. Even recently, it had come in Hindu and few other such reputed newspapers, that CAG every now and then says, I have a case where lakhs of crores is unaccounted. I think these are some of the pressing problems. On one hand, it is only, as sir was saying, taxpayers know the pain of paying the tax, especially if it is income tax. Don't we? All of us are salaried. Don't we realize? If just imagine 1 month without deduction salaries paid, we would be experiencing that we are in heaven, right? Nothing short of the experience of a heaven. So when we pay so much of tax, right, and we go with net salary, and the deducted money goes to the government, and then there is mismanagement or there is a loss of money. And even among the students, I keep saying CGST, SGST, right? So they have become part and parcel of our lives, so much so that we don't realize that if you're celebrating a party, you thought your 4 of your best friends have gone to celebrate the party. It was 4 plus 2, 4 visible, 2 invisible, in the form of CGST, SGST, right? So I think that's the context in which we try to ask several questions, and both the panelists have brought dimensions, and I suppose even I have supplemented them, or I also gave a prefatory remarks, opening remarks. It was pleasure sharing the panel with them, and we have one point of observation or question from my own colleague, Dr. Mahantesh. Sir, over to you.
For the most of the states are sharing on the control board. Sharing our taxes. So how to balance it? They are accordingly constitutionally the central government is collecting this. But states are saying that you are not giving our shares.
It's a
So how to
problem.
balance.
It's a problem of federalism. But when we look at the state, also has to look into the bigger version of the macro level. It is only not the states, only in the four states also has to be taken into account. Which means we have to use more of the position. That's what the government is looking at the 2047. So obviously, when we look at the market, that is the global market, India is nowhere account. They're not considered. We should be a key. Considering the economic situation and the global geopolitical conditions at present, people are moving. The countries are moving from the interdependence to their own strategic objectives. That is really impacting the other countries who are dependent. So, what is the aim of India is to become a self-reliant, so that at least we are not completely independent, but at least a self-reliant where it becomes a major player in the market. So that we can. So, in order to do this, we have to change certain things to apply to foreign investments. And we have to even more resources available. So that's a basic thing.
Okay. So in the morning, it was a nice presentation, sir. Though we are lot teachers, I am concerned, I don't know about others. It is always a confusion for me. In the morning, while listening to the guests who were told that the states which contribute more on GST will often get less because of the article. But the question is that how long this inequality in distribution will continue? Instead of giving more to a state, weaker state, why can't the center can make all efforts can be made so that they also become strong, so that the political allegations that we are giving more and we are getting less can be sustainable. Number two, very recently we heard that while while allocating the funds back to the states, there are a lot of parameters they consider, income distance and like that. And population is one I heard was 50% like so will be distributed among the states depending upon the population. So recently I heard that Chief Minister of Andhra Pradesh, he gave a call to the people. Why don't stop? We could do children have old children. So is it so that the population will be considered while allocating this position to this back? And if that is the case, if states are if gives a call, increase your family so that we get more money, we start again give other information things. Have other informations other implications. So these are my questions. You ask.
So the elaborate answer will be offline, since I think it is time.
Yeah,
But, simple way of addressing this issue is, it is Bangalore, sir. Just give an example. In the Karnataka state, Bangalore, it will account for more than 60%. So Bangalore should not tell the entire revenue should be shared only to the Bangalore. It has to be shared to the other parts of the districts of the state. So same thing that the government, that's the finance commission looks after, and the national security, state government is not contributing to it. So other areas are there where exclusive power is given to the center. Center has to take care of it. Obviously, it's on the development where it has to come with equality. It has to share. Someone you someone with that. In the day, it's a country matters. So politically motivated slogans or other things are different. But actually, when it comes to numbers, has to speak on that. Statistics, data, and other. If that is the case, that's the reason I said the freebies or the subsidies, whatever they are giving, could come to the publicity of the image building. Should have been utilized more. They say that different economical point of view, where they were spending will increase. That's all okay, right? But what about the future? It's not that someone we have to grab and give it. So there is something which we need to spend on capex. If the capex is being increased, states we don't have a proper infrastructure. Kenya is one of the industrial hub, Asia's biggest manufacturing sector, and we know better how to put salaries. Who is ready to invest? If the central government gives much of the money, where is the money going? The more thing is required a transparency system rather than blaming to the central or the state. So it's more of accountability. If AI is going to take place, I feel AI should be more inclined in the administration of the government, where we know where is the money, who is accountable, why it is.
Sir, I have one last question.
Yes.
Maybe deviating from transforming fiscal federalism in India. So my question is towards Pradhan. So we speak so much about reforms, especially to address black economy or parallel economy, which we speak is the basic crux that is pulling down the growth of Indian economy. How far you think this GST reforms has been able to eliminate the loopholes that were existing in indirect tax? So 1 minute, sir, I would like to add up a question to the ma'am. How did only Tamil Nadu become a economy compared to India? To answer both the questions.
Today's session was this on the income tax. So there was a lot of changes brought in by the income tax in the April 26, saying that cash, they want to cover cash. So a lot of cash has to be cut so that economy. So government doesn't want to bring new people to the tax. They don't want to introduce new tax system at all. They want the people to bring into the tax. Like an example, I give the data and statistics. Out of 140 crore accounted population, I will use this right because we don't know what is unaccounted population. Out of this, 9 plus crore are the income tax filers. Of this, 5 crores are the taxpayers. Story doesn't end. When we look at the union budget, where the rupee comes from, 21% of the revenue comes from income tax. Sir was telling we got an heaven and we don't pay the tax. But that's a painful task we are paying. That accounts for 21%, whereas the GST and other taxes accounts for 15%. Other two hidden person are there to enjoy the party. That is accounted for only 15%. Is it not a loophole there? That is certainly the answer.
All right. On behalf of the panelists and myself, I say that we enjoyed thoroughly being associated with you for the purpose of learning. Thank you.